Welcome into a daily editorial here on the KE Report. In this daily editorial, I am joined by Jordan Roy-Byrne. He is the editor and founder of The Daily Gold. Jordan, I want to chat first and foremost about the gold market. Last week, we were starting to see gold get some serious momentum to the upside. A lot of the gold bugs were looking at about that 1375 level, even around 1360, saying we're going to get this breakout. Look at the momentum that we have going, again on the back of a Fed meeting and some trade wars tensions. What we've been seeing the last 2 days is now a general rollover in the gold price. This is right before the quarter end. What do you think? What's the significance of, again, what looks like a lack of another significant breakout in gold?
Well, the significance at the end of the quarter, Corey, is that we're not going to break out to the upside on the quarterly chart, and something I've been mentioning since the middle of last week, where if you look at a quarterly chart, you can see there's clear resistance at 1330. And until today, it looked like gold was in, even after yesterday, gold was still at 1342. Looking at the quarterly chart, gold really, to have this quarterly breakout, it really needs to clear 1330 in a convincing fashion. I mean, it closed at 1333 or 1336. That doesn't really do it. I was looking for at least 1345 or 1350. And I mean, after the last 2 days, it seems unlikely gold is going to reverse to the upside tomorrow in a big fashion. But who knows? You know, maybe I'll be wrong and that could happen. So it looks like we've failed to have a quarterly breakout. And that just means we're not going to, I think, run up to 1375 and break out here in the next couple weeks. I mean, that just gold still obviously has a chance to break out in the next quarter, but the quarter is it's 3 months. That's a long time. So the lack of a breakout here, a failed breakout here at the end of the quarter would probably tell me that gold is unlikely to break out in the beginning of the next quarter or in the first half. I know we'll get into some other reasons, but it looks, you know, the dollar is one of them, but the gold being unable to break out here, you know, it's a little disconcerting. It's a little disappointing. But I mean, as we've talked about, Corey, for weeks, and as we talked about in the last interview, I wasn't expecting an immediate breakout. Now, obviously, I easily could have been wrong, but I'm not dissuaded at all in the long term. I mean, I've been looking for a breakout probably later in the summer, so that could still be on the table. But for here and now, it looks like we're probably not going to get that strong breakout move in the next couple weeks as we were hoping for.
So, Jordan, just a quick comment on the way that, let's say, at least the weekly chart is forming. Gold is continuing to stay at the higher part of its range and pretty consistently is putting in higher lows. So that range is even compressing if you look at the way that these higher lows have been forming. Is this encouraging for you at all?
Well, it's encouraging as long as gold holds above 1300, because if gold makes a weekly close below 1300, then you've kind of damaged the short-term outlook of the chart. There is support around 1300, 1310, and gold's done a really good job of holding above that. And so that's my only worry here is gold is already down to 1320, and it's not that far from 1300 or 1310. So losing that support would tell me that, as I said in your first question, we're probably going to have to push the breakout time frame further out. But the larger question, Corey, I mean, the chart of gold is really fine. Even if it were to come down to 1260 or 1250, it really wouldn't damage in the big picture. So there's a lot of room for, I mean, there's more room, I should say, for gold to decline here, yet the overall structure is intact. I think it's just an issue of, you know, if you tell me gold's going to hold above 1300 and 1310 now, basically going forward, then I would say, you know, we're probably setting up for a breakout sooner rather than later. Now, if gold were to fall below that 1300 level on a weekly basis, even though it would probably be moving closer to another significant low, that would still tell me, you know, maybe it's going to take more than a month or two, maybe in the 3 or 4 month range for gold to break out if that happens.
Okay, so maybe even more important than watching that higher resistance zone is watching these support zones as we continue to put in higher lows, but now that higher low, as you mentioned, is right around that 1300 level. Let's see if gold can hold there. Let's talk about the US dollar, because the dollar started this year looking very weak. It fell for almost all of January, but ever since reaching that low in January of right around 88 and let's say 25, it's been managing to hold there, and even yesterday and today getting a little bit of a buy. What do you think the possibility is that even though the longer term chart looks weak for the US dollar, short term we could actually be seeing a bit more of a sustained move up?
Yeah, and I think the key, Corey, is going to be the high. It looks like at the very end of February, the high during this rally period or attempted rally around 91. That's pretty significant. I mean, originally about a month or two ago, we were talking about this. I was looking for the dollar to move up to the 92 area, maybe around 92 and a half, because there's a confluence of resistance there. Gold recently in the last several weeks, I mean, it's been numerous times, it's been trying to surpass the 50-day moving average, but it keeps getting rejected. Even after yesterday, I thought the dollar could be in danger of closing below 88.50 and making a new low, which I mean, I guess is still possible. But looking at what's happened with gold in the last couple of days and gold not pushing through and the dollar now rising 2 days in a row, and it has that support around 88.50, that tells me there's a risk of the dollar going up and testing that rebound high around 91. And again, so if you're looking at the chart, that's at the very end of February. Now, if the dollar were to close above that level, you could see a little bit more of a rally, where if that happens, then it could reach that target I was talking about at 92 or in the mid 92s. The 200-day moving average is at 92.66. So there is some room for the dollar to rally here and remain in a downtrend based on that. But you could kind of say that high at 91 at the end of February, maybe that's similar to 1300 support for gold. And so if the dollar were to break above 91, then that would obviously raise the odds that gold its next low would be in the upper 1200s, the high 1200s, rather than it continue to hold above 1300 to 1310. So you're right. I mean, the longer term chart, there's still a clear downtrend here. It's still a mess, but the dollar did get very oversold in January, and it's been stabilizing. And if it is not going to break that double bottom it had in January and February, then it has a chance to rally back up to 91 and perhaps even go above that in the spring. So we'll see.
Yeah, we will see, but these two markets, gold and the dollar, have been trading off each other so inversely correlated that it's it's definitely another market that we do need to look at. There's another market that we've been talking a lot about recently, me especially with Chris Temple, and that is treasury yields, especially the 10-year, really starting to roll over. Even the move down has started to pick up steam. The day after we saw the 10-year break 2.8, it's actually fighting back a little bit today, but still down for the day. You were also thinking that we could see long-term rates pull back a bit. What do you think about where we've seen them pull back to currently?
Well, looking at the 10-year, it looks to me, well, my chart hasn't updated today yet, but before today it was at 278, and there should be support around 260. So there's a little bit more room for yields to come down. Now, we were talking about this in recent weeks, Corey, how bond yields were setting up for a counter trend move, because bonds, of course, have been extremely oversold. Like if you look at the net speculative positioning in bonds, it's just huge on the short side. And obviously, looking at the price action in this sector, long-term yields, not only the 10-year, but the 30-year, they were coming up at some significant resistance after a huge move. So it's not that much of a surprise to say that long-term bond yields were not going to break out. and you factor in sentiment suggesting that bonds are going to rally and yields are going to sell off, and here we are where we've started to see a little bit of a bond rally and yields have come off a little bit. So back to the 10-year, there I would look at 260 as a strong support area. So there's more room for long-term yields to come down. It's interesting here because gold looked like it was starting to capitalize on. Now, if we go back a month or so, it was clear that gold had started to benefit from higher long-term yields, and gold it looked like it wasn't going to break out several weeks ago because yields were coming off. But then, as you noted earlier, we had the Trump tariff news, and so that the stock market's been really weak, and that gave gold a bit of a bid. So there's many factors in play here for gold, not just long-term yields, but gun to my head, I would say I think lower long-term yields. I think gold is not going to break out because higher long-term yields, the reason they benefit gold, which not that many people talk about, and why I think they will benefit gold in the future, is higher long-term yields are negative for the economy and they're negative for the stock market, and that is going to drive a bid for gold. And so, and this is what happened. If you look in the mid 60s and all through the 70s, Corey, where what would happen is yields would go up, and then eventually near the end of their peak in that move, the stock market would sell off. And then as yields came down, the stock market would rebound. So the stock market had a little bit of a delayed reaction to that. But I think we're at risk of getting into a similar period. And so obviously higher long-term yields, not good for the stock market, not good for the economy, but they are good for gold. And I know I'm getting long in the tooth here, but another thing we need to continue to watch is the gold to the stock market ratio, because even though gold looks like it's failed to break out here, that looks like it's put in a bottom in favor of gold. So that'll be something, if gold's going to continue to correct here and not break out, and continue to consolidate, that's something we will continue to watch, and I'm sure we'll talk about next week is how is the gold to the stock market ratio looking, because that looks like it has been in an important bottom.
Okay, yeah, that's a very interesting comment. I think watching that gold to stock market ratio is important because, hey, it's been almost going to extreme levels, and if we do start to see a bottom, more importantly, it's a change in money flows, I think, that could benefit gold in the longer run. Let's just wrap it up with a quick comment here, Jordan, regarding this whole end of quarter mentality. We will be seeing the US dollar down for this quarter. Gold, still a question mark as to where it will close, but it entered this quarter just above 1,300. And treasuries, well, those, at least yields, are still going to be up, but reversing. How much does this quarter play into the longer-term assessment that I know you and I have had for the precious metals, that any sort of a breakout, we might need to wait to more of the later part of this year?
Yeah, well, that's a good question there, Corey, because if gold were to close the quarter well above 1330, which it looks like no longer will happen, but if it was going to close at 1350 or 1360, that would tell us that a breakout move would really be imminent, or it could happen in the next month or two. The fact that it for now it looks like it's not going to happen, that would tell me that we're not going to see an immediate breakout here, probably in the next couple weeks or the next month or two. But it's still possible that in the next quarter, it's still possible towards the end, in my opinion, that gold could have that breakout move. It just tells us that here and now and at the beginning of the next quarter, we're unlikely to see that breakout move begin.
Okay, so again, maybe a little bit of patience, but on the flip side of that, also consider that maybe taking some positions in some of these stocks, because boy, some of these stocks are, again, down at levels that we hadn't seen since, well, their pullback in 2016 in December. It's crazy to think that they have done nothing since that time, well over a year now. But I still believe taking some positions, being positioned, you will do very well in the longer term. Jordan, great chatting with you. Have a great rest of your day and a great long weekend.